Assalamualaikum. We are from Group 2 and we are going to present about Revlon's strategy management. Revlon is a beauty and a personal care company. It was founded in 1932 by Charles and Joseph Revson. The company is headquartered in New York City, United States. Revlon produces many types of beauty products. These include makeup, skincare, hair care, fragrance, and personal care products. Some of its well-known brands are Revlon, Elizabeth Arden, Almay, and Sinful Colors. Revlon sells its products all over the world. Customers can buy Revlon products from retail stores, beauty salons, and online platforms. The company is well known for offering beauty products that are affordable and easy to access. Revlon operates its business in two main segments. The first segment is consumer products, which are sold to the general public. The second segment is professional products, which are made for salons and beauty professionals. The United States is Revlon's largest market. However, the company also sells its product in international markets, including Europe, Asia, and Latin America. Revlon focuses on innovation and strong branding to stay competitive in the beauty industry. The company competes with other large beauty companies such as L'Oreal, Estée Lauder, and Procter & Gamble. In conclusion, Revlon is a global beauty company with a long history and a strong presence in the international market.
Hi, Assalamualaikum. I will talk about Revlon vision and mission. So first, let's look at the Revlon mission. Revlon has one statement as follows on the corporate website related to the vision mission. Revlon is a global color cosmetic, hair color, beauty tools, fragrance, skincare, antiperspirant deodorants, and beauty care products company whose vision is glamour, excitement, and innovation through high-quality products at affordable price. Revlon vision, strength, and weakness. Revlon vision is glamour, excitement, and innovation to high-quality products at affordable price. If we look at the vision, the Revlon vision didn't have futuristic and unique element, but their vision is quite inspiring and also quite concise because it is simple and has only sentence that is concise and easy to understand by all readers. Revlon mission is a global color cosmetic, hair color, beauty tools, fragrance, skincare, antiperspirant deodorants, and beauty care products company. If we look carefully in this statement, we can realize that Revlon mission only includes 4 components out of 9. Those components are mentioning the products or service, their target markets, their philosophy components, and the last one is self-concept. Those elements that Revlon didn't have was customers, technology, concern for survival, concern for public image, and concern for employees.
Good day, my name is Nur Ayuni Fana binti Muhammad Imran and my number matrix is A2230082. Now I would like to present about the external analysis. Now we go to the Porter 5 forces analysis. Number 1 is buyer power, which is high. Customers have almost no switching costs and low brand loyalty, easily comparing products in mass retail stores where major brands sit side by side. Retailers themselves are strong intermediaries, further increasing buyer leverage. Number 2, supplier power, which is low. Raw materials like waxes, oil, and pigments come from many suppliers, giving manufacturers plenty of alternative and low switching costs. No supplier group holds significant powers. Number 3, threat of a new entrant, which is medium. Large investment in research and development, marketing, and safety compliance create real barriers. But because customer loyalty is weak, innovative new brands can gain market share relatively quickly once they overcome upfront costs. Number 4, threat of substitute, which is medium. Easy substitute exists within the category of lip, which is lip gloss, lip stain, lip liners. Broader lifestyle trends such as the no makeup look also pose a cultural substitute, though lipstick demand remains stable overall. Number 5, competitive rivalry, which is height. Brands compete intensively for shelf space, visibility, and fast product turnover. Price promotion, constant new shades, and formula innovation keep rivalry high and margins tight. For overall, The mass market lipstick industry is highly competitive with strong buyer power and fierce rivalry shaping a challenging profitability landscape. Today, I will be presenting 5 external opportunities and 5 external threats that Revlon faces in the broader beauty and cosmetic industry. Each factor follow the AQCD criteria: actionable, quantitative, comparative, and divisional, based on the information available in the case. External opportunities. Number 1, expanding market for lipstick. The global lipstick market is projected to grow at about 6% annually until 2020. This gives Revlon an opportunity to expand its product lines and strengthen its competitive position against larger players like Estée Lauder with 16% market share and the Procter & Gamble company P&G with 10%. Number 2, rising demand for eco-friendly and chemical-free products. Consumers today prefer safer, cleaner, and environmentally conscious beauty products. Industry-wide, 25% of total sales is spent on research and development, safety-focused advertising. Revlon can create products that use fewer harsh chemicals, animal products, and heavy metals to fulfill the demands of increasingly safety-conscious consumers. Number 3, expansion into international markets. Currently, only 15% of United States cosmetic sector sales come from international markets, showing significant global potential. Brands like L'Oreal have demonstrated strong success internationally. Revlon can strengthen export into Asia and Europe more aggressively and harmonize global branding strategies. Number 4, growth in men's and skincare segments. Skincare is growing faster than haircare, and men's skincare is rapidly rising category, reported by Estée Lauder CEO as potentially outperforming company-wide growth. Revlon can expand into men's grooming, anti-aging, and performance-based skincare products. Number 5, shift in sales channels and retail dominance. Large retailer and drugstore currently generate 50% of lipstick sales, while direct-to-consumer channels represent only 8%. This represents a strong opportunity for Revlon to strengthen partnership with big retailers like Walmart and expand digital and direct sales channels. This opportunity is controllable through sales strategy, omnichannel design, and marketing. Next is external threats. Number 1, lack of brand loyalty and high brand switching. Consumer easily switch between makeup brands, and Revlon market share is only 5%, is far behind Estée Lauder and P&G. This increases the cost of maintaining loyal customer and pressures Revlon to spend more on advertising and innovation. This threat is measurable and significantly impacts competitiveness. Number 2, no makeup and natural beauty trends. Social media influencer and celebrity widely promote #no makeup looks. While its numerical impact is not formally measured, the trend is strong among younger generation and may reduce long-term demand for makeup, particularly lipstick. This is a trend that Revlon can only partially control through product diversification and repositioning. Number 3, fierce competition in the cosmetic industry. Revlon faces intense competition from global beauty giants with stronger financial and research and development capabilities. Rivals frequently launch a new product with a new shades faster, making it hard for Revlon to keep up. Number 4, high research and development and marketing costs. With the industry spending up to 25% of revenue on research and development and marketing, Revlon struggle with tighter margins. Without the proportional sales growth, profits like ABT may decline, affecting long-term stability. Number 5, economic pressures and import competition. The United States lipstick market is worth 1.5 billion, with imports contribute only 200 million. Revlon competes with both premium European brands and cheaper import from China and Mexico. In tough economic times, consumer may switch to lower cost options. Now, the external factor evaluation EFE matrix. EFE matrix is used to analyze Revlon's external environment by identifying key opportunities and threats. Each factor is assigned a weight and a rating based on Revlon's current response to this external condition. The total weight score indicates how effectively the company is responding to the external forces. Revlon's total EFE matrix score of 2.68 is above the average score of 2.50, indicating that the company is responding reasonably well to the external opportunities and the threats. The strongest opportunities include the rising demand for eco-friendly products, expansion into the international market, and the shift towards large retail channels. However, Revlon must also manage significant threats such as low brand loyalty, strong competition, natural beauty trends, and high marketing and R&D costs. Overall, the EFE score suggests that Revlon is moderately effective in capitalizing on opportunities, but must strengthen strategies to address competitive pressures and changing consumer preference.
Assalamualaikum and hi, so I will present about the strength of Revlon company. So first we look at the Revlon brand portfolio. Revlon isn't just one name, it's a collection of heavy hitters like Hermès, Color and Mitchell. So this variety as a competitive shield. If one specific market segment takes a hit, the others keep the company steady. So they also give Revlon incredible leverage for cross promotion and ready-made platform to launch new product to any category. So the second one is their commitment to innovation. In the beauty industry, if you aren't the first, you are the last. In 2014 alone, Revlon invested roughly 32 million into research and development, with over 200 specialists across 3 sales states. They aren't just following trend like the shift towards natural ingredient. They are creating the proprietary formulas that define those trends. Then the third one is financial liquidity and flexibility. Let's talk their numbers. With 275 million in cash equivalent and over 770 million in current asset at the end of 2014, they have a massive financial buffer. This is critical because it allows them to fund big marketing campaign or acquire companies. So the fourth one is one of the smartest move Revlon made is the integration of the Colomer Group, which established their professional statement. This division both in over 500 million in 2014 by selling directly to salon. Revlon moved beyond real-time mass market. This segment allows for premium pricing and high-touch marketing, provide a more stable and device review stream. And the last one, their unmatched global distribution. They have their global logistics. Revlon has a distribution network that spans thousands of countries and use mix of their own sales force and independent distributor. This structure is incredibly hard for competitors to replicate. It serves as the backbone for the international expansion, helping the company to reduce its overall reliance on the US market and tap into global growth. And next, for the weakness of the Revlon, the first one is the high dependence on US market. So our first concern is that Revlon is too focused on one region. About 50% of their revenue comes from the United States. This is a huge risk because in the US economy enters a recession, more than half of Revlon income could disappear. It also means there aren't growing enough in faster moving international market. The second one is declining in investor confidence. Next, we look at the stock market in 2015. Revlon stock price dropped by 12%. This shows that the investors are losing faith in their company current direction. And the third one is unstable and falling profit. The financial data shows some worrying trend. In just 1 year, Revlon quarterly net income fell from 15.6 million down to 6.2 million. This massive drop suggests that the company is struggling to control its internal cost of losing its pricing power, meaning they can charge enough to keep their margin healthy. And the fourth one is gaps in the senior leadership. This is also a structural problem in the office of Revlon. Their lack of CEO or Chief Operating Officer, this person who turns a CEO version into daily action. Without this role, it's easy for department to stop communicating, which makes it very hard new business plan successfully. And the last one is pressure from mass retailers. Finally, Revlon relies too much on a few giant retailers like Walmart, because Walmart provides so much of their sales. They have the power to demand lower prices. This skews Revlon profit and gives the company less control over their product are promoted and sold in the store. The internal factor evaluation (IFE) matrix is used to evaluate Revlon internal strength and weakness. Each factor is assigned a weight and rating to determine the total internal score. This helps identify whether the company's internal position is strong or weak. The overall of IFE score for Revlon is 2.6, which is slightly above the average value of 2.5. This indicates that Revlon's internal position is moderately strong, with strengths such as powerful portfolio, strong R&D capacity, and global distribution outweighing its external weakness. However, issues like declining investor confidence, unstable net income, and leadership gaps must be addressed to improve the company's long-term competitiveness.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Aisyah binti Baharun. My matrix number is A22B0022. I will continue with the recommendation for the SWOT matrix. First, strength opportunity, SO1, global expansion into mass grooming and skincare. Revlon has strong global market coverage and a wide variety of products. Right now, there are big opportunities in the Asian and European markets, especially for men's skincare. So the strategy is to use the strength to enter that segment more aggressively. Next is SO2. Launch eco-friendly product line. Revlon is well known for its innovation and high quality yet affordable products. Currently, market trends are shifting toward toxin-free and eco-friendly product. So the strategy is to expand an eco-friendly product line that is more affordable and accessible to consumers. Next is witness opportunity WO strategies. WO1, improve customer loyalty using e-commerce or direct to consumer. The main issue Revlon is facing right now is low customer loyalty. However, there's a big opportunity with the growth of e-commerce and direct to consumer channels. So, the strategy is to build a more personalized loyalty program and use customer data to improve engagement. For WO2, reduce dependency on mass retailers. One of Revlon weakness is its heavy reliance on mass retailer, which make up about 50% of its sales. But there's a clear opportunity in global market and online platform. So the strategy is to open direct to consumer store in international market and further expand globally. Next is strength trade strategy. ST1 compete on value against high R&D competitors. One major threat is the intense competition, especially from competitors with stronger R&D capabilities. But Revlon's strength lie in offering high-quality products at affordable price. So, the strategy is to highlight the brand's value for money positioning to attract and retain customers. ST2, reframe beauty standard to counter no makeup trend. One of the threats Revlon is facing is the growing trend of no makeup or natural beauty. But Revlon's strength is its brand identity, which is built on glamour and innovation. So, the strategy is to create media campaign that highlight natural elegance and high-quality minimalist looks. Lastly, winners trade WT strategies. WT1, control costs and focus on core products. One of Revlon's weakness is its less efficient cost structure. A major threat is that R&D and marketing expenses are very high. So, the strategy is to focus on high-impact core products and reduce operational costs. WT2, acquire niche brand to improve loyalty. One of Revlon's weaknesses is low customer loyalty. A big threat comes from many strong competitors in the market. So, the strategy is to acquire niche brand that already have a loyal customer base to strengthen our portfolio. Overall, Revlon's internal position is slightly above average with an IFE score of 2.0. The company's key strengths include a strong brand portfolio, solid R&D capabilities, global distribution, and a growing professional segment. However, these strengths are offset by major weaknesses, particularly high debt level, low profitability, unstable net income, and heavy reliance on the US market and mass retailers. Financial ratio analysis show that while liquidity is acceptable, Revlon faces high financial risk due to leverage and weak margin. The SWOT analysis highlight the need for strategic focus on cost efficiency, digital transformation, and internal expansion. In conclusion, Revlon has a strong strategic potential, but long-term success depends on improving financial discipline and effectively executing targeted growth strategies. That's all from us. Thank you.